Right, let's check the analysis first and remind ourselves of the technical picture. All right, we left off last week. We just remind ourselves of the overall longer-term technical picture that we are inside of this ending diagonal. The market is still doing a wave 4 correction. We expect this wave 4 to test 0.95. It's almost now certain that it will be testing 0.95 across probably the coming 48 hours. This level here is 0.95. This is just a spike below the lower boundary of that ending diagonal. All right, this will be actually the end of wave. We think it's going to be the end of wave 4 altogether. We're having here, or at least the end of that, ABC correction, probably, or leg A of that correction altogether. So we're still looking to buy at 0.98 and 0.97. Okay, it's still the same technical picture. We will check it in great detail now on the 1 hour chart. We left off last week. We were having this first leg here down in A, and then we're heading in a higher leg in B. We were still waiting for that leg down in C. We can see that we were having some kind of a local bear flag. We're still inside that bear flag. We're actually at the low boundary of that bear flag. All right, and we expect to break lower. That's why we expect to get to see these levels of 0.97 and 0.93. Let's take a look now at the real market. All right, so you will find that we're having the same technical picture on all cryptocurrencies, more or less. We're still having some kind of an extension in the current correction. Okay, and that would mean that so long as we're seeing this kind of momentum, this is of course, this is really contained at oversold level. Yes, and it is very possible that we have already finished with leg C. Okay, that is also true, but there is still possibility that we will have another spike down. Okay, so it is usually this leg C. It's like we've had a 1, 2, 3 here. Now we have an A and a B, and we still have another leg C down. This is the usual case with this correction. A leg C should always be a bit longer than leg A. All right, so we don't really need, we do. Okay, so we would still expect to see 138.2%, 161.8%. We still expect to see these levels, and therefore we would consider only to buy at lower levels unless we have a confirmation that the market now is giving us, or the feed, the momentum feed on the 15-minute chart is positive into the 1 hour cycle. So let's take a look at the 15 minutes and see what that feed is, what's going on. And you can see we're having the momentum extreme. Yes, that is true, but we're just barely above. Just barely above the oversold level, or this oversold line. Okay, so let's try to project We're still having an ABC correction. Let's just update the count, but we are really still having an ABC correction, and this means that extension will be muted. We cannot yet confirm that we're going to break out of that bear flag in depth to do these levels of 0.98 and lower. But so far as we're still having negative momentum, we would really take the best that the market would give us, and that would mean that we would stay put with entries at 0.98 and 0.95. So we'll just update the count. So that let's just first update the count, then we can see the exact projection or where this correction is probably going to end. All right. Okay, so this is a 5-minute chart that we're having here. Remember that we're in the final leg of the correction, leg C, which we expect could and maybe not, but it just could break out of that bear flag and do these levels 97 and 95, 0.97 and 0.95. This kind of momentum plot that we're seeing here is not an impulse wave because we do not have an indentation of an internal wave 2. So we would know that it's an ABC correction. This final leg is actually an ABC correction, nothing more, and that ABC correction will just be 3 swings. All right, so it is just labeled 1, 2, and 3. We know that this is the higher degree wave because it is actually a positive momentum plot, so it's definitely a 1, 2, and that's internal 1, internal 2, internal 3, internal 4. This is final 3, so this is just a 1, 2, 3 wave. You can label it here if you want to do an Elliott count as 5, because that was an internal 1, 2, 3, 4, and 5. So we have a yellow label in 5. Now the market is doing B. That is, of course, an internal degree A into that C. All right. Now the market will be doing B, and that B naturally would just be a fib correction into A. Okay, so we'll go for the high fibs. We're looking at 1.10, for instance. Current market is, of course, 1.06. All right, let's now move to higher time frames. Let's move to 15 minutes in order to be able to project where this correction is finally going to lead. Alright, so we would want better use these labels here, and then okay, so let's just remind us. Okay, we have everything now in order, but let's just remind ourselves of the technical picture, the overall technical picture, because there's something here that we need to take into consideration, and that is the ending diagonal at which this market is moving. Okay, remember we are at the bottom of this ending diagonal, and so we should not really drift far away from that ending diagonal. We were looking at that ending diagonal. We're just looking at probably a bounce at 0.95 in order to be contained by the lower boundary of that ending diagonal. We do not expect to go, for instance, all the way down to 0.72, at least definitely not below level 1s here. Your most appropriate target is going to be 0.95. Okay, so when we are projecting the completed end of this correction, we would go for these targets, because this is what is in line with the pattern that the current price action is currently showing or is currently indicating. Alright, so this is the lower boundary of that ending diagonal. Let's have it a bit thicker. We're doing some kind of a bear flag at that point. That was wave B. Now wave C, this C in white here is going to be, of course, an A and a B, and we're now doing the final leg into C. So projections for that final leg into B are actually a confluence of the projection for leg B itself. Alright, you're having B here. It's projecting all the way to 0.99 and 0.91. You're having projections of this right from the top of B here all the way. Alright, so this is not really okay. So let's take these projections, correct them. This wave B is going to project 127.2 and 138.2, which is 0.9580 and 0.98. Alright, now this A has finished. There has been a wave B, and now we're finally doing that wave C. That wave C already has done a 1, 2 and a 3. We just check this on the 5-minute chart. We should retract higher, just above the upper boundary of that ending diagonal, and then so long as we're seeing this kind of negative momentum, we should break lower into a C, or even this small internal wave into 5 here is actually an A and a B and a C. Okay, now wave C of this wave will take you down to 0.97. So let's just have this updated to an A. Okay, and then a B. And finally we move down to the end of that correction. It's going to be a C somewhere here. Alright, so I hope now everything should be clear. Okay, we are at the final leg of that. We expect this is to be the final leg of actually all the crypto issues are now currently doing wave Cs. Okay, and this wave C is going to take time. We have to be patient. It's going to actually it should either prolong in time or in price, because we don't believe it's going to prolong in price. It is already supported by a level 1. It will prolong in time, and then the breakout will be sudden higher, alright, in wave 5 or in another extension of that correction, but a bullish extension of that correction. So currently we've already done an A and we've already done a B. There is an internal A, there's an internal B. Now there's going to be this yellow A, B and C. Projections for that, sorry, higher degree C, we're looking at these internal projections of leg A and B and C are gonna be taking us, these projections that we're showing here, so that everyone can run them on their own stations, are actually going to give us 0.98 or 0.9768. that these are most probable. There's still that projection again at 0.9525. okay, that would be the terminal end of wave C. There's another projection that we could be using right from the top of B all the way down to the market bottom here, okay, because that was the first leg into wave C. All right, that was A in C. This is B in C, just did something like 50% or 61.8%, and then you're gonna run down into C. So projections of that B all the way down to the bottom of the market will give you 0.98, 0.9580. Possibility was a spike at 0.91. We best filled, of course, at 0.9750. all right, or 0.96. You're having 0.9780, and we're having here, of course, 0.9770. all right, and there is here, of course, 0.9550. The stop remains the same at 0.85 or just below 0.88. all right. You would want to consider that this kind of momentum that you are seeing is a triangular momentum. We buy at the momentum extreme. This is very important. Okay, this is not a momentum extreme on the 1 hour. We cannot use, actually it will be very rare to get a momentum extreme now on the 1 hour, but we should be on the lookout for momentum extreme on the 15 minutes or on the 5 minutes. We're having here momentum extreme on the 15 minutes. So this is minus 241. This is a momentum extreme on the 15 minutes, which would actually mean that the next leg down, if we get to see these levels, is a buy. That's what we would expect. The next leg down to 0.9768, even 0.95. These projections that we just showed, this is a 3. There's going to be a B here. There's going to drift a bit higher and do just 50% maybe. And then we're down again to 0.98 and 0.95. There is a cycle extreme on the 15 minutes. Next time we are down, we'll do lower price on higher momentum. Momentum will probably just spike a bit below oversold, move again higher. We'll have a divergence at that point. And what this momentum extreme here means on the 15-minute chart is that this is the final leg of the correction. This is a 3, so there will still be a 5. We call it a C because it does not actually adhere to Elliott's rules or tenets, meaning that a wave 4 will break above the bottom of 1. Okay, so it's an ABC and not a 1, 2, 3, 4, 5. If it doesn't, if it bounces, okay, no problem. We still expect it to be contained by 0.98, but we expect that it will do a B above level 1. all right, and then we move lower back into C. This is going to be a wave C or wave 5 to 0.98 and 0.95. We would not recommend to buy at this level. You could, of course, theoretically buy from current levels all the way to 1.09 and so on. All right, this is not guaranteed that it will move far. So at 1.05, you may look at to see a spike into 1.08, 1.09, maybe not, maybe. Therefore, you cannot really. We do not have a signal to buy. Okay, we'd also want to be on the right side of the direction. Okay, so we will not sell. It is possible, of course, to sell against the bottom of 1. You're looking here at 1.05. Someone may consider that, well, you could sell this. All right, you're selling current market 1.0564. You're not supposed to go really much above level 2, which is 1.12. all right. The volatility is not that strong, and again, we only want to be on the right side of the market. The right side of the market is a buy because there's positive momentum on the 1-day chart, on the daily chart. Okay, so we would not really consider to sell 1.10, 1.09. Technically, it is possible. You don't have to sell the market. You could actually sell 1.10, this level here B. All right, with a stop maybe at 115. We could still get, we know we're going to get that correction. expect to get that correction 0.98. okay, so it could be a good sell, but we would be on the wrong side of the trade. It would just be a very short-term trade, and really we would be on the wrong side of the trend. I'm sorry, not on the trade. All right, so this is the overall technical picture, and what we could do is we would rather, especially it's a Monday, the beginning of the week, engage in the correct direction, which would mean that we'd want to buy 0.98, all right, and 0.95. Technically it is possible to sell into B 110, even a bit higher 111. Really, it is really possible technically. Okay, and we expect then that you're gonna get that correction still down all the way to 0.98 and 0.95. we accumulate longs at the bottom of C. If you're already long, all right, you would use a spike. If you see a spike into 1.10 and 1.11, you would close it out, because you're still gonna get that wave C down. You're still gonna get to see 0.98 and 0.95, these levels.